This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview for the week of May 11th through the 15th. And we have none other than our senior market analyst, Charles Rotblatt, with us once again. He puts this report together for us each week, monitoring the market events, economic events of the week, and earnings events for each week as well. And so this particular week, we have only 255 companies reporting as earnings for the first quarter reporting period kind of wind down. 16 of those are in the S&P 500. Retailers, you say, stepping back into the spotlight. We see the focus now of investors shifting away from corporate earnings and back over to economics. Is that what we're seeing?
We're starting to enter a period really where there's going to be fewer catalysts overall. We do have the retailers, as you said, stepping in the spotlight. That's because their fiscal quarters always end a month later than most companies. So we'll have a few stragglers in there, Hewlett-Packard, Dell, those type of companies, but mostly we'll see retailers. But by and large, first quarter earnings season is coming to an end, and that creates problems for a bull market. We're seeing volume drop. At the same time, we're seeing stock prices rise. And when you start looking at where are the catalysts, it doesn't look that great because certainly we don't have earnings to help us. We're looking at fewer earnings estimate revisions, particularly fewer positive revisions, only because we're going to have less companies reporting better than feared earnings. So then we're kind of looking at what's going to happen with GM. You know, what actions are going to be taken by the banks to really raise the capital they need. We're not going to have the stress test or some good news out of the banking sector necessarily to prop us up higher. So I think it's going to be questionable. And I think for the economic data, we've had this huge rally. And I think a lot of the improvement we've seen in economic conditions, we're still going downhill, not as quickly as we were before. But I think a lot of that relative improvement's already been priced into the markets as well. So I'm kind of expecting either an outright pullback or maybe more of an extended trading range. If I was a betting man, I'd go with the pullback, but we could see a long trading range. That's a prolonged trading range. That is within the realm of possibilities.
Getting back to the retailers who are going to be reporting this week, on the heels of some better than expected sales numbers that just came out, and the final numbers, the final tallies will be coming out during this week as well. What do you see for that retail sector as far as earnings are concerned? Good news, bad news, mixed news?
It's somewhat mixed. I think on average it's going to be better than feared, and that's a key word. When we look at a lot of companies, JCPenney, Kohl's, they both said that, and several other companies did too, they said that sales, same store sales, which basically means sales for store locations open longer than 1 year, dropped. However, the drop wasn't as bad as they expected. Some companies actually said margins held up. So that should result in some upside in earnings. And it's worth noting when we look at the consensus estimates today, Friday, May 8th, we're really only a day after the retailers reported their April numbers. So in a lot of cases, when you see the consensus estimate, it really has not factored in the April sales numbers. So there is room for surprise, room for upside in terms of the earnings, in terms of the actual earnings numbers. But I think, so I think it's really a case of numbers being better than feared. Not great. Consumers are still being careful, and you can see that in Walmart. They had an increase in sales, but again, people are trying to be cautious as to what they buy and being more selective about what they don't buy.
I heard one analyst actually say, getting back to the markets and you know what's out there to move the markets this week, one analyst actually said that what's going on Wall Street doesn't really line up with what's going on in the economy. How do you feel about that?
I think it's really not so much what's happening on Wall Street doesn't line up with what's happening with the economy, but what's happening on Wall Street's not lining up with what the average American sees. We are having the pace of economic deterioration slow, and I think we could eventually get to a period of growth. But if we have growth of only 1.5%, to the average American, it's going to feel like the recession's still going on. And so it's very possible Wall Street could see higher earnings. We could see stocks rise, and yet at the same time, we could see the number of jobless people who have lost their jobs increase as well. And so it could really be almost a jobless recovery, which would be really painful for people. So I do expect there to be that disconnect. How long it will last is anybody's guess. Definitely looks right now like 2010 could be a year like that. possibly 2011. And it's really a case where there is going to be a disconnect because companies can grow earnings by keeping costs under control and just having a small amount of growth. And that can take place long before people start seeing their jobs come back or are able to go to their boss and say, you know what, I'm doing a really good job. You really need to adjust my salary because I sacrificed before. Sad, not hardly a great situation by any means, but that could be a scenario that would really play out.
I like the way you put that. I'm going to have to write that down so that when my time comes, I'll know what to say. Do you actually own any of the stocks you mentioned here?
No, I do not.
All right, get over to Zacks.com, our homepage, and check out the text version of Charles' earnings preview for this most current week by just scrolling down the homepage and clicking on the headline right next to Charles' picture. With Charles Rotblatt, I'm Terry Ruffalo.